While I specialize in workers' comp, recent events have left me wondering what is going on with California's insurance market. Let's explore. California is no stranger to wildfires, but I'm sure we can all agree that they've been getting worse. Climate change is fueling extreme weather events across the world, but California seems to be taking a beating of almost biblical proportions. Floods, fires, earthquakes, the only thing missing is an avenging angel. In 2018, the devastating Camp Fire near Chico caused over $16 billion in damages. Insurance companies suffered massive losses and started declining to renew policies in 2019, with the non-renewal rate increasing by almost 30%, which is a substantial amount. In 2023, State Farm, the largest homeowners insurer in the state at the time, and Allstate made news by announcing they were withdrawing from the California homeowners insurance market. They stated a, quote, rapidly growing catastrophe exposure as the reason for their departure. In plain English, that means they were only going to continue to lose money year after year. California's insurance commissioner, Ricardo Lara, threw himself a fit, threatening to not allow them to leave, like an abusive ex-boyfriend standing in the doorway. But State Farm, Allstate, and a number of other smaller insurance companies told Lara, it's not us, it's you. Many homeowners were stuck not being able to find insurance. The insurance they could find was often quite expensive. Many people had to rely on the state's insurance. Unfortunately for some, this resulted in them not having insurance at all. Fast forward to today, the catastrophic Palisades fire has been in the news. At the time of writing this, the death toll stands at 25 people and it's likely to grow. From a financial perspective, it's estimated to be over $250 billion in damages and growing as well, with new fires spinning off from the original, like new versions of Law & Order. So why are these fires happening so frequently? While some will tell you it's God's wrath, the answer is much more complex. First, climate change has caused the area to have more, quote, fire weather days. These are days where the weather is perfect for fires to not only start but spread rapidly. Windy, dry, and hot days. California now has 61 more of these days than it did back in the 1970s. So fires just have more opportunity. The second reason is just that more people are building houses in these areas where wildfires are likely to happen. California has a pleasant climate most of the time. It's an attractive place to live. Unfortunately, those sunny days have a drawback, and it's that they make the foliage very dry. The third reason is that many of these cities outside of Los Angeles are in areas that were once desert. These areas are already prone to being hot and dry. Throw in a drought, and it's a terrible recipe for an awful wildfire. Equal in its destructive power, the government decided to come to the rescue. The Insurance Commission of every state regulates what premiums insurance companies can charge. They regulate how much profit a company can make. Usually these are good things. They keep the insurance companies from gouging policyholders, and they make sure that insurance companies remain solvent. They do this by balancing the needs of the insurance companies with the needs of the policyholders. But in California, they only focused on the needs of the homeowners, trying to keep insurance rates as affordable as possible. They made it so insurance companies could not pass on the cost of reinsurance to their policyholders. Reinsurance is a complex process, but the best way to understand it is that it's insurance for insurance companies. This allows smaller, regional insurance companies to compete on the same marketplace as some of the bigger insurance companies, without having to take the risk of going insolvent or bankrupt. But California also made it so insurance companies could not use advanced predictive models to determine your rates. Insurance companies were only allowed to use historical losses from the past to dictate premiums. As you can imagine, with a changing climate, this does not allow your company to accurately predict your true risk. Insurance companies have so much data they can predict anything with a scary amount of accuracy. But California would not allow insurance companies to use it until recently. California recently reversed a decision in exchange for insurers agreeing to write more policies in wildfire-prone areas. I spoke a little earlier about California's government homeowners insurance. It's called Fair Access to Insurance Requirements, or FAIR. This plan was established by the state, but it's operated by private insurance companies. The state pays these companies to handle the policies and reimburses for most of the cost of these claims. However, the FAIR plan has increased significantly, with a 40% increase since 2023. They are now insuring more than $450 billion in homes. This has led to concerns that one bad fire season, such as the one we're experiencing now, could lead to its insolvency. Ultimately, this is something both state and national leaders will have to address, because the climate catastrophe isn't going away. Colorado is experiencing its own issues with wildfires. Florida, Texas, and Louisiana are all dealing with catastrophic hurricanes, making homeowners insurance a difficult prospect for many. While I've made some jokes during this episode, I'm only trying to liven up a very dry subject. This is a very serious matter. The loss of a home can be devastating to families. It can send them into poverty and homelessness. They can lose jobs. Politicians in Washington need to stop bickering like children and get people the help they need. But if you're in this situation now, what can you do? Well, to get a full payout, you'll need to provide proof of losses. If you've lost your home, this can be challenging. That receipt from your 85-inch television probably burnt up with everything else. You'll need to get creative. Check your credit card statements. Check websites where you purchased items for proof you owned it. Best Buy, Zales, Amazon should all have record of what you purchased. That can be used as proof. If your house is burnt, that's easy enough to prove, but the possessions can be a challenge. Make sure to file your claim as soon as possible. Don't wait. Get your claim in ASAP. If you wait too long, you could end up waiting years for your claim to be completed. Catastrophes like this require catastrophe adjusters, and there aren't that many in the United States. This next bit of advice is for everybody, even if you're not currently facing a disaster. Walk through your house and take a video of everything. Pay particular attention to any valuable items. Show the condition it's in. If you do need to prove your losses due to a fire, flood, earthquake, or some other natural disaster, you'll be able to reference that video as proof. Just make sure that it's stored off-site, like on Google Drives. They have a free membership for up to 15 gigabytes, or you can upload it to YouTube as an unlisted video. If you are currently dealing with the loss of your home, please remember that storms don't last forever. Neither do fires. Things will get better. Don't give up. If you'd like to help the victims of the wildfire, I'm going to place links down below where you can donate to reputable charities. Please subscribe to our channel for more episodes helping you navigate the often confusing world of workers' comp. Please note that all claims and states are different, so none of our videos should be taken as individual legal advice. Comment below any workers' comp questions you have, or click on this video to continue enjoying more videos from me, the Workers' Comp Adjuster.